How much would you have to have invested in the NASDAQ or the QQQ ETF in order to be able to retire by 2030? Let's break it down. For starters, I'm going to assume that we would need around $1.5 million for a basic normal retirement. If we could get to the point where we had $1.5 million invested in the QQQ ETF by 2030, then we'd be able to withdraw approximately $90,000 per year for 30 years in retirement. These figures are based off of the average household expenses in the US today and then adjusted for inflation. Now, if you don't think that you'd be able to live off of that amount, then you could either adjust these figures for yourself or consider maybe moving to live somewhere cheaper where the cost of living is a lot lower and where you could live like royalty for the same amount of money. So if our target is $1.5 million for a basic normal retirement, then I'm also going to add a $4.5 million target for a luxury retirement, because having 3 times that amount invested by 2030 would allow us to spend a lot more every single year and to live a much more comfortable life in retirement. So considering that, how many shares of the QQQ ETF would we need to have by 2030 to be able to actually pull it off? Let's break it down. Now, for starters, the Invesco QQQ ETF tracks the largest non-financial companies on the NASDAQ, so this means it's a lot of tech companies that are high growth. If we look at the top 10 holdings, these are all household names. You have Apple, Microsoft, Amazon, Nvidia, Meta, Google, Tesla, Broadcom, and Adobe. Now, in order to have an idea of how many shares we would need by 2030, we have to have an idea of what the stock price of QQQ is going to be worth by 2030. And I have 4 different valuation models here based on the bear case, the base case, the bull case, and the moonshot case. Now, if you look at the historical growth of this ETF, you can see that, for example, since inception, so since this ETF was created, it's returned an average of 9.17% per year. But over the last 10 years, it's returned 18.93%. Over the last 1 year, it's returned 32.78%. However, in 2022, so last year, it returned negative 32%. So this is a high risk, high reward investment strategy. Now, in order to project out what QQQ could be worth by 2030, I'm basing it on the historical data, although it's important to note that it is possible that over the next 7 years, there is a significant downturn, in which case it would probably be very difficult to achieve any of these goals. But excluding any sort of massive market crash, recession, or depression, then we're gonna base our numbers off of the historical data. So for the bear case, I'm using 7%. The historical since inception return of this ETF has been 9%. And this ETF was created in 1999, so that is 24 years of data. So if 9% has been the historical average, then I think by using 7% as an average over the next 7 years to 2030, that's a reasonable bear case. For the base case, I'm using 9% as that average figure. Now for the bull case, I'm using 15%. We can see that the 3-year returns have been on average 15%, whereas the 5-year and the 10-year have been well above that 15% figure. So for the bull case, I'm going to use 15% per year growth between now and 2030. And finally, for the moonshot case, I'm using 18% growth rates. We can see that it's technically possible. Over the last 5 years, it's returned nearly 18%, and the 10-year average returns have been in excess of 18%. So since we're projecting this out to the year 2030, which is about 7 years from right now, I think this is a reasonable moonshot valuation case. It's definitely not out of the realm of the possible because we see that it has happened before. So with these 4 valuation models, let's see what the price of the ETF would be by 2030, and then how many shares you would need to be able to retire off of that amount. Okay, starting with the bear case valuation model, you can see that if the ETF grows by 7% on average, and we have the valuation models here, 7% on average to the year 2030 would mean a share price of $528. So $528 into 1.5 million means that you would need around 2,830 shares to retire in the lean retirement case. This is the baseline retirement case. And if you were going to buy that at today's prices, that would cost you just over $1 million. Now, obviously, that's very expensive, and I think 7% per year is pretty pedestrian growth rates. That's not really going to move the needle for someone that doesn't already have a lot of money. But you'll see as we go up to the base case, the bull case, and the moonshot case, then the amount you would need to invest today to be able to pull this off goes down significantly. Now, in the luxury retirement scenario for a $4.5 million target, if the price of the QQQ shares is around $528, then that means you would need 8,520 shares, which would currently cost you about $3.1 million. Now, again, I'm sure you're already thinking anybody with $3.1 million today can already comfortably retire. So let's see what the base case scenario is. If there is an average of 9% growth between today and 2030, then the share price of QQQ will be around $600 per share. And that means you would need 2,486 shares to retire in the base case, which would cost you around $930K at today's prices. For the luxury situation, same share price, $600, you would now need 7,400 shares to retire, which would cost you about $2.8 million today. But moving up to the bull case, because this is where it gets more interesting, I would say. 15% per year growth for the next 7 years, and we've seen that over the last 5 years, it's returned 17%, and over the last 10 years, it's returned almost 19%. So this has happened in the past. It doesn't necessarily mean that it will happen in the future, but it is possible. And if there is a 15% average growth rate between now and 2030, then the share prices of QQQ would probably be around $875, which means you would need 1,708 shares to retire, which at today's price of $373 per share would only cost you about $640K. And in the luxury retirement scenario, you would need 5,143 shares, which would today cost just over $1.9 million. And finally, in the moonshot valuation scenario, if the ETF grows an average of 18% per year until 2030, then the share price would be over $1,000, $1,048 per share, which would mean you would only need 1,426 shares to retire, which would currently cost you around $530,000. And in the luxury retirement scenario, you would need 4,294 shares, which would cost you currently around $1.6 million. Now, in terms of some key takeaways here, you can see that it's going to take a lot of money invested today in the QQQ to be able to retire by 2030. And that's largely because that's only 7 years away, and it doesn't give your money enough time to compound and to grow and to have that snowball effect. And so that's why you're seeing that even in the moonshot valuation case, if the ETF is growing 18% per year on average, you still need to invest $500,000 today to be able to pull off retirement 7 years from now. And with the luxury retirement scenario, you know, if you had $1.6 million already, you could retire in a little bit of a leaner circumstances already today. And so whether or not investing in the QQQ makes sense for you and your retirement goals is something to consider. It could be a part of a balanced investing strategy. I definitely wouldn't YOLO everything into this, but then on the other hand, there's probably other ways that you can leverage your money to make more and then to have a better chance of being able to retire by 2030 or 2035, 2040, who knows. The QQQ has returned some excellent gains over the last 24 years or so, but there have been some down years, and if there's a down year the year before you want to retire, so 2029, let's say, then that can have a serious negative impact on the overall portfolio, obviously, because last year it was down 32.5%. in 1 year. And I guess this is where I should just reinforce that this is a thought experiment, and I am by no means suggesting that you should YOLO all of your money into the QQQ ETF in the hopes of an early retirement. Thanks so much for watching, and if you want to see 7 things that you can do today to increase your likelihood of being able to actually retire early, then check out this video right here.